Hey guys, so I just finished recording a new analysis video for Theta, but as I was editing it, I saw something on the chart that I didn't see the first time I was going through it. So I'm just making this video to point it out that we are still in a larger falling wedge. Okay, so if you're going to trade this, just draw this lower support line and you'll see that we are still within it. Now, all of the levels that I discussed in the video that's going to follow this, they're all still relevant. They're all still valid. This is just one thing that I forgot to point out. And there's a certain point in that video where I show this trend line and I basically say you can extend it out. And this will potentially be a level of support if the level breaks this horizontal support region. Well, you can also do the same thing with this, okay? And this is actually going to be more significant. So just drag that out. And if this horizontal level breaks, you could look to this line as a potential support as well. Okay, so just wanted to point that out. And here's the video that I just recorded. Hopefully it's helpful. Hey guys, what's going on? It's been a little over a month since I last took a look at Theta. So that's what I'm going to do now, just give you guys an update. And I'm going to start on the weekly time frame to give you a macro overview of the price history. But before I get into it, a couple things. Firstly, if you're not subscribed and you want to get notified when I release these videos, click subscribe, click the bell, click on all. If you don't do that and you click away, you might have a hard time finding the channel again in the future because it's a pretty new channel, only around 1,000 subscribers. And because of that, I'm not really prioritizing the search algorithm. Also, if you want an exchange to trade Theta and pretty much all the other coins that I talk about, I'm going to put a link to the exchange that I'm currently using in both the pinned comment and the description. Okay, so the price action on Theta, actually the levels are pretty straightforward. So to recap where we are, I mean, basically we had this massive run up, which I actually caught a lot of this. And following that big move to the upside, we had this long retracement back down to right where we are right now, which is around 60 cents, right? So from almost $15 to 60 cents. Guys, learn from this next time. In the next bull market, when you have the feeling of euphoria, when you're holding a specific altcoin, make sure to take profits because this is what's going to happen to about 98% of them. So if you don't take your profits up here, somebody else will, and then you'll be left holding the bag. Okay, so this long-term retracement took the form of a falling wedge. We recently broke out of it. Okay, so we broke out of it, retested it. So when you break a long-term level of resistance, which is what this line was, we came down, retested it. As the price came down to this level here, a lot of buyers stepped in. That's why we have this candle closing in the form of like a long wick. Started coming back up, but ultimately we crashed all the way back down and retested this trend line once again, okay? So this downsloping level of what was once resistance has held a support twice. So now we're in this range. So actually, if you want to trade Theta, I recommend that you draw these levels on the chart. So just take a horizontal trend line. The first level is going to be where the price currently is. And just to market, just go at the lower end of all these candle bodies here. Okay, just paste it right in there. Okay, so put one line. I have it at about 56 cents, so 0.569. So actually 57 cents. That would be good. Next level, it's going to be if this current level breaks, you want to have this on your chart for a potential support level. And that is going to be it's about 37 cents. And the way I got that, based on the price action, it was the resistance right here. When we broke it, we came back down to retest it as a support. So we had a successful resistance to support flip right here. But also if I take a Fibonacci retracement tool, run it from this swing low here, from the low all the way up to the swing high, that's going to give me these retracement levels. And as you can see, this level that I just recommended that you draw on your chart lines up perfectly with this 618 retracement level, right? The golden pocket region. See how this yellow line basically covers it. So if I delete the fib, that's exactly where the line is. This is the 618. So you definitely want to have this level on your chart. Now, another level that's going to be relevant if we lose the current level of support, it's going to be this downsloping level of resistance, this trend line that was resistance for a long time, but we broke out, and it's the line that we just retested as support twice. Just take that and here, let me see if I can grab it here. Extend it down, and yeah. So that's going to give you confluence. So if you see the price come down here, not only do we have this horizontal level of support at the 618, it may also line up with this diagonal trend line as well. Okay, the next horizontal line that I recommend that you draw on the chart is going to be right here. Just identify the bottom of these two candle bodies and just paste your horizontal line right there. So you see that it was a support level right here. It was a support level right here. it was support right here for about 3 weeks. Okay, so you see, the price would come down, but before the candle closed, this weekly candle, buyers would step in and defend the level. Especially right here, you can see that this was a level that they were trying to defend, and they did successfully, although the bulls got wrecked the following week. But this was the level of significance that people were looking to. And then, as you know, when you have a strong level of support that breaks, if the price comes back up to it again, it's going to act as a potential level of resistance, and that's exactly what we saw right here. So we got rejected from it here. Wick came up, sold off. Again, wick came up, sold off before the candle closed. And then, that was the sign that we're going to get rejected. And then we broke all the way back down to this low. So right now, the price is in just kind of like a range between where we are now and up here at around 83 cents. Now, there's another resistance overhead in addition to this horizontal line that I just told you about. It's going to be this diagonal trend line. So you see it initiates here, and then we got rejected from it here, and then again right here. So 3 touches makes the trend line valid. So if you want to draw this on your chart, go ahead and do that, because again, this diagonal trend line could be a potential resistance as the price comes to it right here. So keep that in mind. Now, this trend line actually goes beyond these 3 touch points. If I take it here and I run it from the top all the way down, so you see actually on this larger trend line, we have 1, 2, this cluster here is another touch point, comes down, and then here, and then here. So 5 touch points. And this pretty much lines up with the level that I just said, okay? So this is just the same line, but extended all the way up to the start of the move. So yeah, definitely draw this on your chart, because this is going to be the local resistance level that the price has to contend with. Okay, and one more horizontal resistance level is going to be right here. So just take a trend line and just draw it at the top of these candle bodies. So you see we have 3 rejections from this point as well. Rejected here, here, and again the price came up and we got a big sell-off as soon as it did. And this just ended up as a wick, okay? So this level is, hold on, this is about $1.23, okay? So have that on your chart as well. All right, so once you have all these levels marked on your chart, you can start to look for potential trade setups, okay? So if you look where we are right now, we're very close to this support region, okay? So for me, I'm not going to look to take a short on support. If anything, I'm going to consider taking a long position. So before I enter a long, I want to look for potential signs that a reversal might be coming. So the first thing I want to look for is some divergences, right? I want to find a bullish divergence. We made a low here, and then we made a lower low, just slightly. This is slightly below. But now let's look to the oscillators. And you see on this divergence indicator, we made a low, then we made a higher low. And I think that's also the case on the relative strength index oscillator. So if I change the chart right here and then pull it up. So yeah, again, we have a low and then a higher low. And then on the price action, we have a low, then a lower low. Okay, so it is showing signs of a bullish divergence. Okay, so that's check 1. That's a good sign for me. And then beyond that, what I like to see is a setup that gives me a good risk reward ratio. Okay, so we have this horizontal resistance level right here. And then if I was to enter at the current price, I would place my stop loss below these 2 wicks. Okay, so in this particular trade, I've already marked it out. If the price is able to get all the way back up to the top of the range here, this trade would give me a 1 to 4.5 risk reward ratio, meaning for every $1 I risk, I could potentially get $4.50 back. So that's a very good R&R. In percentage terms, that would have me risking almost 8%, so 7.91%, to potentially get 35% to the upside. So that's very good, but the problem is we have this diagonal resistance line in the way. So if I was to take this trade, I think what I would do, enter, and then if the price comes up to this level of resistance, that's when I would move my stop loss up to my entry point. So I would go like this, move my stop loss up. So if this diagonal line does serve as a resistance and the price comes back down, I'll get stopped out at break even. Now, ideally, I wouldn't want to enter where we are right now. This is something I would just keep an eye on. And it's more optimal because I don't really want to risk almost 8% on the trade. What I would do is I would just patiently wait to see if the price comes back down, okay, comes back down to this support level. And then if I could get an entry, a long entry around here, well, that makes the R&R a lot more juicy, right? So if I go back out to the higher time frame and get a broad view perspective on this, In this scenario, if I'm able to get in here, I would only have to risk 3.62% to get a potential 41% to the upside. And even if the price doesn't make it back up here, even if we get rejected at this diagonal trend line, right? So say it comes up here, that's still an amazing risk reward ratio. That would still be a 1 to 4.95 risk reward ratio, even if the price comes up to this diagonal line and gets rejected. So for me, I'm in no rush. If I end up missing this opportunity where we are right now, no problem, but I'm going to wait for the price to come back down here. And if I get this potential entry, that's what I'll take. If the price breaks down, that's fine. I only lose 3%. And then if we start closing a weekly candle, okay, a weekly candle body close below this horizontal support region, I'm going to look for this to then serve as the resistance, and then this lower range down here will be my next target for a short, okay? So I'll just do the opposite. Candle body close on the weekly time frame below this horizontal line. I place my stop above it, my stop loss above this line, which will be then the resistance level, and then down here will be my target. And that also will give me a pretty good risk reward ratio. Say theoretically I'm able to enter right here. I place my stop loss above, right? Above the current support level, which will then be a resistance. I'll target down here at the next level. And this would give me a potential risk reward ratio. It's not as good as the other one. It would be 1 to 2.55. Potentially get 27.53% to the downside, and I'd have to risk 10.79% to get it. So it's not as ideal as the one I just showed you. I would rather just be patient, wait to see if the price comes down to support, and then look for a long. First potential resistance would be this diagonal line, and then I can just move my stop loss up and then target the upper range. If it doesn't work out, that's okay. I still get stopped out in profit. Okay, and if the price is able to break through both these resistance levels, meaning this diagonal resistance as well as this horizontal resistance, and then we close a candle body on the weekly time frame above this level being 83 cents or about 84 cents, so candle body closed above here, then that's going to trigger a long entry for me. I'll place my stop loss just below here, and this is going to be the area I target for my take profit. Okay, $1 and about, but I'll probably front run it a bit, so I'll probably get out around $1.19. So anyway, hopefully you found this helpful. These are the key levels that I'm going to watch on the Theta chart, and yeah, I'm just going to try to look for short-term entries based on these regions. So hopefully you found that helpful. That about wraps it up. Once again, if you're not subscribed and you want to get notified when I release these TA videos, I'm doing about 2 or 3 videos every day. Click subscribe, click the bell, click on all. And if you want an exchange to trade Theta, the one that I'm currently using is linked in the pinned comment and the description. Now you may need a VPN to access it depending on your location. So I also put a link to a VPN again in the pinned comment and the description. Okay guys, have a good day. Take care. Bye.